The Dow Jones had a bad night overnight. We'll go to the coalface. What's going on there? And Donald, where's your trousers? Hillary's in front on the polls. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Let's have a look at the reason why the Dow Jones was down about 200 points overnight, Paul.
Well, a couple of reasons. I mean, the big reason is probably comes back to Donald. I mean, that is, he did so. Because the Republican Party looks like it's imploding in the US. More concerns that perhaps the Democrats might take control of both houses of Parliament with Hillary. That's bad for health stocks because there's been a big debate about the rising healthcare costs, and you've seen the health sector down about 2.5% last night. I think that's one of the major drivers, Peter. Look, there's a couple of other factors, but it's all sort of caught up in, the US market. It's sort of at that pivot point, but they don't quite have enough reason to just take it higher yet.
Well, this morning on switzer.com.au, I actually showed how the stock market since March, February has been rising. And it kind of like, this is the time when the market's going to question whether it goes up or goes down. And I think also we should point out that Alcoa did not report well overnight. Alcoa is the first stock out of the blocks. Earnings season is going to be important, isn't it, for the market?
Earnings season is going to be really important. And we've also got this, other thing that's occurring is globally everyone's starting to factor in that interest rates are going to go up. And I think that sort of causes a reasonable people to pause because it means, different sectors are going to do different things. So there's reallocation occurring out of this, some of the interest rate sensitive stocks. There's also question marks as to, how much that means for the US dollar and all those type of things. We're seeing a weaker pound. Gold price falling. There's a whole lot of things occurring. I think in that environment, it's hard to actually everyone to sort of press the same button because there's still a couple of things to tick off, including what happens on November the 8th, notwithstanding it looks like it's going to be a Hillary shoo-in. Yeah,
that's right. And also you've got the OPEC question mark in November, you've got the election itself, December interest rate rise. There are a lot of curveballs out there, and I don't know whether the markets have got a big enough bat to hit them out of the park. Let's go to the coalface now, Paul. What's going on with coal?
Yeah, I think this is one of the big stories around, and we've seen it very much in the price of BHP and stocks like Whitehaven. But news out of yesterday that in terms of the coking coal price, that's what's used in terms of the manufacture of steel. According to the AFR this morning, the Japanese steel makers have signed an agreement with the Australian exporters for a price in the current quarter of just over $200 a tonne. That's up from about $88 back in March. So, coal prices.
We thought coal was dead.
We thought coal was dead and buried. Coking coal that used in steel has gone up over 120%, and even thermal coal, which is used in your power production, that's up like something like 60%. So, and there's talk about mines reopening, So, and the other part of the story
is the Greenies' nightmare.
It's the Greenies' nightmare, of course, what it means for the federal budget bottom line. Because some of the research says for every dollar in coal price, it's worth $5 million to the bottom line. $5 million. It's up something like $100. They calculate, or one of the calculations this morning says it could be worth as much as $7 billion to the government.
That's why Scott Morrison's laughing his head off.
Yeah, so I mean, that's one of the reasons with the Aussie dollar is not going down. I mean, we've talked about everyone's been bearish on the Aussie dollar. The US dollar is going up. The Aussie dollar should be falling out of bed. It's not. One of the reasons is commodity prices are pretty firm.
What about that BT expert who had the dollar going to 47 cents? He'd be feeling a little bit stupid at the moment.
He'd be feeling a little bit embarrassed. I mean, you'd still expect, stronger US dollar currencies like the Aussie should suffer, but that's not happening. That's why we're making progress against the euro and the pound sterling and the yen. I still think the Aussie dollar looks firm. There's no sign of any weakness there yet.
Okay, let's go to Donald, where's your trousers? Because Hillary has allegedly trousered him in the ratings-wise because she's 10 points up against Donald since the debate. What's going on there?
Well, look, I scored it pretty evenly. I think most people did as well. But, there's some things. Hopefully the Americans are finally seeing sense. There is another debate to go, Peter, on October the 19th, I think, and that's back to sort of the moderator style with one moderator and questions. The audience was down. I think Americans are getting a bit sick of it. Let's hope that common sense will prevail and Donald will be consigned to history.
But he's actually saying it's Donald Unchained now, because all the Republicans have actually let him go, and so he's out there just throwing out every curveball, to repeat myself, at everybody.
Well, you've got to give him marks for trying.
Yeah. Well, it's going to be very interesting. The market implication quite surprised me. Let's just talk this through. Imagine Donald does win. What do you think happens to the stock market after, or even ahead? If he was ahead going into the poll, what would markets do?
I think if Donald does win, I mean, the market in the short-term implication is bad. It's got to be also bad for potentially even countries like Australia, simply because we're an exporter, and Donald's very anti-free trade, anti some of those agreements. Some of his ideas around tax policies would cause major headaches for big business. So, I mean, Tony Featherstone in Switzer Super Report wrote a pretty good article of some of the winners, but in the short term it's going to be bad for the market. What's overplaying the market at the moment, though, is the idea that Hillary might be a clean sweep, and that the Democrats might take control of Congress.
Yeah, and then the rate rise as well.
And the Senate, and that's still probably less likely. But in that situation, some of her policies, particularly around changes to healthcare, could actually get up. So that's what's going to, on the one hand, I think the market's saying Donald's so unlikely, don't worry about it. But if it's an absolute clean sweep for the Democrats, the market's also not going to like it. So it's probably that balance you actually need for which is to be a positive for the US market.
Yeah. Well, isn't it great? We've got this entertainment show called the Donald and Hillary battle ahead of us, and that will actually keep us very interested until November 8th.
Well, 4 weeks to go, and this time, in 4 weeks' time, the Americans will be just about to stop voting, and the counting will begin.
Okay, so I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.